Hey investing friends, July was a wild month in the markets. By mid-July, the S&P 500 hit 5669 and was up 19.5% year to date and 26% over the last year. Fabulous. It then proceeded to pull back 5% over the next 7 trading days. We finished the month up $9,000 in our TFSA. But that's not the big news. Stay to the end of the video to see which stock I dumped and why. Let's do this. To start us off, our 5th largest holding is Bank of Nova Scotia. It represents 7% of our portfolio. Back in May, the bank announced it has put its dividend growth program on hold until next year. There has been no news since. Q2 earnings will be released on August 27th. Also, July was payout month, so we dripped one share with a 2% discount at a price of $62.09. This added $4.24 to our annual dividend income at a yield of 6.8%. Next, we have our new 4th largest holding, TC Energy Corp at 7.2% of our portfolio. This just surpassed Bank of Nova Scotia, with its share price recovering nicely this year. TC Energy Corp reported earnings today, and I can't wait to see what they're like. Let's see if the trend stays, my friend. We dripped 2 shares at $58 a share. That added $7.68 to our yearly dividend income at a yield of 6.6%. It's crazy to think that this was yielding 8.5% less than a year ago. Next up is Fortis in the utility sector. It represents 4.9% of our portfolio. Take a peek at its financials. They continue the steady growth trajectory. And 2024 Q2 results were just reported and they were stable. The company outlook remains intact. The corporation's $25 billion 5-year capital plan is expected to increase mid-year rate base from $37 billion in 2023 to $49.4 billion by 2028, translating into a 5-year CAGR of 6.3%. Not crazy growth, stable growth. It's like a fir tree, not bamboo. Something else I like to keep an eye on is their debt level. As you see here, as of June 30th, 2024, consolidated fixed-term debt maturities repayments are expected to average $1.55 billion annually over the next 5 years, and approximately 74% of the corporation's consolidated long-term debt, excluding credit facility borrowings, had maturities beyond 5 years. So it's looking good. Next, we have our 2nd largest holding, RioCan Real Estate Investment Trust. It represents 9% of our portfolio. RioCan will be reporting earnings on August 8th. The Bank of Canada lowered the overnight rate another 25 basis points to 4.5%. This will slightly impact RioCan in the near term. In the meantime, I'm happy to let this sit on autopilot. We dripped 4 shares at a price of $16.76. Finally, the drip timing was on our side. That added $4.44 to our annual dividend income at a yield of 6.6%. Next up is BCE Inc. at 4% of our portfolio. They reported earnings today, like a few other holdings we have. It'll be interesting to see where revenue came in according to their outlook. I see this as a stable bond-like holding. Let's not forget, BCE Inc. is Canada's largest communications company, with significant infrastructure in fiber and wireless networks. We dripped 2 shares at a price of $44.24. That added $7.98 to our annual dividend income at a yield of 9%. Next, we have Manulife Financial Corporation at 5.2% of our portfolio. It is our one holding in the life and health insurance industry. Manulife will be reporting earnings soon on August 7th. I expect to be speaking about some fantastic results come our August portfolio update. Our next position is Enbridge. It represents 5.9% of our portfolio and is in the midstream oil and gas industry. There was no news to report in July. Enbridge will be reporting earnings tomorrow though. Can't wait to see those results. Next, we have Telus Corporation at 5.6% of our portfolio. The position size of Telus keeps growing compared to BCE Inc. This is intentional, as I see it having more growth potential. Also, Telus free cash flow generation should rise and stay elevated now that it has passed the bulk of the capital spending associated with its fiber network overhaul. Telus also reports earnings tomorrow on August 2nd. We added 23.419 shares at an average price of $21.40. That added $36.45 to our annual dividend income at a yield of 7.3%. Next, we have Pembina Pipeline Corp at 5.9% of our portfolio. It'll be releasing Q2 results on August 8th. There was some notable news during the month though. Pembina Pipeline Corp announced Pembina Gas Infrastructure's acquisition of working interests from Whitecap Resources. It brings with it a bunch of strategic benefits as listed here. This will be funded with their existing credit facility, and it's expected to close next quarter. Guys, have you heard about the latest offer from Moomoo? While Wealthsimple offers 4% per annum for cash accounts with funds under $100,000, Moomoo is stepping it up with an incredible 6% per annum for funds under $10K for 60 days, along with other great perks. Sweet deal for one of the best US stock trading brokerages out there. To get this limited time offer, just use my link below, whether you're in Canada or the US. Next, we have our defensive holding, which is our largest holding, Capital Power Corp, an independent energy producer. It represents 15.2% of our portfolio. It reported earnings July 31st. Here's some highlights. Over the last year, adjusted EBITDA is no longer heavily dependent on Alberta. Alberta now makes up 34% and US 43%. As you can see from this slide, US diversification reduces adjusted EBITDA volatility. Previously, Alberta power pricing had a huge impact on EBITDA. And one last highlight. CPX announced another dividend increase, 6%, their 11th consecutive annual dividend increase. Nice work, Avic Day. We dripped one share at a price of $40.53 with our 1% discount. That added $2.61 to our annual dividend income at a yield of 6.4%. Next, we have one of our largest holdings, First National Financial at 8.2% of our portfolio. Q2 was released at the end of the month, and here are a few of my highlights. The common share payout ratio was 69%. That's great. Mortgages under administration increased 8% to $148.2 billion from $137.8 billion at June 30th, 2023. And as you can see from this slide, total assets and revenue continues to trend in the right direction. I'm not going to go through all the numbers. You can pause this slide if you like to look at them. Next up is Brookfield Corporation. It represents 4% of our portfolio. The share price has completely recovered from last year. There was no news from the corporation last month, and we'll be reporting Q2 earnings on August 8th. I can't wait. Next, we have MCAN Financial. It represents 2.3% of our portfolio. We're looking to double this position at the right price. With the Bank of Canada's overnight rate dropping, we may see some price appreciation. MCAN will be reporting Q2 on August 12th. Next up, we have another asset management company, Fiera Capital Corp. It represents 2.8% of our portfolio. A cool piece of news from them was that Fiera Capital Corp was selected to manage $600 million in new mandates from CDPQ. They will report earnings on August 7th, pretty much like our entire portfolio. Next, we have SmartCentres Real Estate Investment Trust. Man, that makes me smile. It makes up 6.2% of our portfolio. Like anything in the real estate space, the Bank of Canada lowering their overnight rates may have a small impact on share prices, temporarily. SmartCentres will be reporting earnings on August 8th. By the way, with so many earnings being released this month, would you like to see my highlights on some of them? Just comment below which one you're most interested in. Next up, we have TD Bank at 3% of our portfolio. This is the second biggest diversified bank in Canada. The share price of Toronto Dominion Bank has been yo-yoing since their money laundering probe. It reports earnings on August 22nd. Those will be interesting. Next is goeasy Ltd. It represents 0.5% of our portfolio in the consumer finance industry. This is our future replacement for Fiera Capital Corp. We're just waiting for a good risk to reward entry price again. The big news in July was the announcement that Jason Mullins will transition out of his role as president and CEO at the end of the year, but will remain as a director on the board. This news hit the share price right away. Stay tuned for Q2 results on August 8th. Next, our one ETF is VFV, Vanguard's non-hedged S&P 500 Index ETF. VFV still makes up 0.2% of our portfolio. Why don't I just build my position regardless of the price? I don't DCA or dollar cost average into my positions. Ever. More on that another time. Did you pick out which holding was dumped? The darling of all income funds in Canada, Canoe EIT Income Fund. We sold all 230 shares at an average price of $14.10 in the middle of July. We realized a capital gain of $768 to go along with thousands more in distributions received. We've been speaking of selling our position for years now. As you know, we're not income investors, though we will be living off our portfolio income in the near future. I have a preference for dividend growth stocks that not only beat inflation, but also provide a solid total return, which is the goal of any portfolio. If I had reinvested the distributions over the years, I would have achieved the 12.5% average annual return of EIT. That is very impressive considering the over 2% MER of the fund. Kudos to the management team for their success over the years. With this sale, I continue to build more of a cash pile for future opportunities. This is the second month running where we did a lot less buying. We deployed a total of $875.24. This added $63.40 to our annual dividend income at a yield of 7.2%. That is much less than the income we received for the month, not including the sale of EIT Income Fund either. I'm a dividend growth investor that will soon be transitioning away from my secular work, so I need to protect my portfolio from drawdowns as much as I want it to grow in a bull market. In the future, I'll share a strategy I've been using to boost my income that has a great risk-reward ratio. One of the main ways I protect my portfolio is by sector and industry diversification and weighting. Here's the breakdown of our portfolio by industry as of July 31st. Diversified banks dropped from 10.5% to 10% of our portfolio. Midstream oil and gas makes up the largest at 19.4% of our portfolio. Regulated electric utilities make up 4.9% of our portfolio. Retail REITs make up 15% of our portfolio. Telecom services make up 9.9% of our portfolio. Life and health insurance makes up 5.1% of our portfolio. Independent power producers make up 15.4% of our portfolio. Asset management makes up 9% of our portfolio. Consumer finance makes up 0.5%. The S&P 500 index makes up 0.2% of our portfolio, and I know it's not an industry. And lastly, mortgage finance makes up 10.6% of our portfolio. So, what do you think of the industry breakdown of the 17 stocks and one ETF we own in 10 industries? Let me know in the comments below. Thank you so much for watching. Until next time, I'm Mr. Financial.